Hey everybody, welcome to Trading Capital's Daily Analysis video. I'm your head market analyst here on July 7th, 0707, jumping into the S&P 500. Before we touch base on the S&P 500, this was pretty much a broad market rally with only the real sectors down, broker-dealers and utilities basically flat. Energies received a massive boost with natural gas inventories coming in a little bit lower than expected, and obviously oil taking a beating over the last couple days. It's being defended that $100 level. So with energies getting a boost, with big cap tech getting a boost, small cap tech, it was a pretty strong day. Overall, we did indicate that there would likely be continued strength throughout the rest of the day, and the reason being is semiconductors opened up exceptionally strong early in the morning and never looked back. They continued to rally, and I posted a little blurb on my Twitter. So for any of you looking to get additional daily intraday insights, I usually post many tweets in the morning and mid-afternoon to give you a sense of where the markets are likely to go. My Twitter handle is Trading1Capital, Trading1Capital, so feel free to give me a follow there and you'll get additional insights above and beyond what we do here. So overall, looking at the S&P 500, I apologize that I couldn't do a video yesterday. Just some personal errands came up which needed my undivided attention, which forced me to be away from the charts. But overall, we were pretty active yesterday. We were pretty active today. And yesterday let's see what we did yesterday. We bought Alcoa, we bought Ford, a couple new positions, and one day, a massive one-day pop. Let me just bring up Alcoa just for a quick second. So if we bring up Alcoa, what a magnificent pop. We picked it up here yesterday at the 40.93 level. Massive reversal off of yesterday's action, therefore it indicated likely probable upside. And look at this massive gap. We sold it here at 46.57, banking a double-digit gain. Is there probably more upside to at least this gap? Yes, I do think so, but you can't kick a gift horse in the mouth. When you get a double-digit gain on a swing trade in one session, you take it and you run. We can always look back to re-enter, because if this retraces back to this gap fill, I'll probably look to buy it again. So congrats on Alcoa, 13.7%. We also picked up Ford, which you can see off of our low here, 1091. It's had a massive move, so we're up over 6% in there. I do think it can go all the way test the top of this channel that it has been trading in since it made this failed breakout attempt. And ultimately, that would put us deep in the money if you were to rally up to this gap fill on the top of this trend line. That could roughly be a nice 15-16% gain. So overall, let's head back to the spiders. The spiders are pretty strong today, up over 1.5%. The Qs are also up on the day, but the spiders have just opened over here. You had a gap up, and they really never ever looked back. You had a little bit of pre-market trading, massive surge, and then you just had this light float volume on this continued grind up. So whenever there's extremely light volume, and today there's an exceptional light volume, and this is kind of why I don't trust it, because light volume means no institutions are really buying. It's mainly smaller funds and smaller money, and there's not really that convincing capital flowing back into the markets. So on the spiders today, we're trading just under 50 million shares. We'll likely finish around 50 million with about 30 seconds left on this candle and a little bit of post-market trading. But overall, extreme light volume. The interesting thing is, look at this beautiful parallel channel that we've been trading in. You had your high here, your sell-off, your high, another sell-off, and then you've just been trading at the upper end of this range. Now, you are putting in a little bit of an extended period. I do think you're slightly overbought in the short term. So if we just simply take out this parallel channel and we flip to the daily chart, you can see we are running into this resistance. This was this bullish consolidation. This looked like your breakout that was forming on your inverse pattern over here, but it actually failed with the tremendous sell volume that took hold on that specific day. So this wide range red bar is going to be absolutely huge level of resistance. I do think we have the ability to get through it, But even if you get through that, you have this downsloping parallel channel that we've been watching for quite some time. And then you'll also have this technical gap fill. You'll also have the center point of this channel. You have the short-term moving average. So there's tons and tons of resistance moving forward. And we'll just have to see if we can get through this wide range red bar. Next level is this 399 400 level. But at this point in time, we're accumulating more shorts. So we've taken a substantial amount of longs off the table. We are net short again after we have profited tremendously from this bounce. And I like picking up shorts as the markets continue to rally, because we will have another down leg. And the likelihood of us, if we keep continuing to grind up on light volume into the Fed meeting, I do think that we're going to have a scenario where the Fed can jawbone us back down. Now, there's still a lot of trading sessions from now until the Fed meeting, so we'll just have to take it day by day. But if this grind up continues on light volume, let's just flip on the volume channel or candle, shall we? So if you can see at the bottom here, you have this declining buy volume pressure occurring, and that's never a good sign. Because when the sell volume does come in, it's usually pretty ferocious and heavy. So we'll just have to continue monitor spiders. You are into resistance. There is potentially it does favor a short-term pullback before you can potentially consolidate to move higher and pass through this resistance. So let's just wait and see how this unfolds over the next day. But let's continue to accumulate shorts, offload some of our longs as the markets continue to grind up. Flipping to the QQQ, NASDAQ over here. The NASDAQ is up on the day just over 2%. Let me just erase some of these lines. You can see my chart is really messy. I have a lot of intraday action going on here. Okay, so now that we have this chart cleaned up a little bit more, so you can see that you're running into the short-term daily 50 moving average. Again, it's very similar to the spiders. You have this wide range red bar that we're going to have to get through. Now the gap fill is very, very close, so on a technical basis it does favor a move up to at least fill that gap. But overall, there's many stocks that have had a pretty tremendous bounce off of the lows, even like Apple, Google, Microsoft. They're showing great strength, but I do think it's only a moment, a matter of time before we start to see that next down leg occur. Let's take a look at oil. Oil, again, fantastic bounce. You can see that one of the reasons we started shorting oil via the SCO today, I was waiting for this retrace back to the breakdown zone, and we got that perfect retrace. Can't get any cleaner than that. We pulled the short on the SCO right around that level. We're already in the money on our SCO. We bought it at 24.05, so we're up about 74 cents, give or take a few. So great job on executing that short. And again, if oil continues to go higher, there's a likelihood it can retrace back to this trend line of it was your support, but now it's your resistance. But if it does continue to surge up there, we'll accumulate more. And frankly, I wouldn't mind seeing oil start to grind up even a little bit more, so we can get more exposure to the SCO, because eventually this economic cycle will take hold on the whole energy industry, and energies are notorious for collapsing twice as fast as the equity markets, and I certainly do believe that's what we're going to witness. Natural gas, a huge pop on natural gas. So you can see that natural gas, it got this pop off of the IEA data that was released. There was an unexpected drawdown in the inventories, which gave natural gas this massive pop. Overall, natural gas is still bearish. If we get a float up to around this 650 level, expect me to start accumulating KOLD again, because I do think a beautiful natural retrace will come right into this previous pivot. And then if it does continue to go higher, we will start to accumulate more. But overall, I do think you have to suffice at the minimum coming down to this downsloping parallel trend line. And if natural gas continues to bounce, it just means we'll get another opportunity to short natural gas again. Let's take a look at gold, because gold has had some interesting action. Gold is still under pressure. It's just been holding this level over here for the last day or two now. The reason why gold is under pressure and you're not getting that convincing bounce that it needs is one simple fact. If we flip to the DXY, the US dollar is just flirting. You can see that gold is pretty much the mirror image of the US dollar here. You've had a pause day right over here, and same thing with gold. Longer term, you are into resistance here. But I do think the US dollar potentially can move higher, being the fact that the yen is being printed into oblivion by the Japanese. So if the Eurozone economy starts to falter, which it's likely, as well as the Japanese economy continues to print exorbitant amounts of money, the US dollar can continue to see some strength, which will put tons of pressure on gold. But being the fact that gold is still holding relatively well in comparison to how much the US dollar has surged, it is impressive. So we are long gold right now, and I have no qualms accumulating more. Our next accumulation zone will likely coincide with the bottom range of this parallel channel. You can see from your invasion high over here, then you hit the parallel channel over here, you made a new high, you hit the top of this channel resistance here, you hit the lower point of support here. So you're just ping-ponging back in this range. Eventually, you're going to break out of this range. I do favor a move to the upside. But that being said, we have to continue to see the US dollar roll over. As soon as the US dollar rolls over, then I do think gold will get that extra boost that it deserves. Let's also take a look at silver because we are along the SLV. Silver, you have found support. Notice how you are chopping in this parallel channel as well. The reason why all of this action is trading above this parallel channel is because you did not technically confirm ever on a daily close above this reversal candle over here. So you're still technically, this is your trend, this is your parallel channel of resistance, this is your parallel channel of support. So silver is oversold. I am expecting that bounce. Obviously silver is being hit with the likes of the rest of the commodities, copper, steel, oil, natural gas. So all the rest of the commodities have been hit, which is why silver is being hit, because commodities correlate to GDP. If GDP is contracting and shrinking globally, naturally commodities are going to take a hit. But I do think accumulating silver at these levels is an interesting and intriguing buy. I will consider adding a little more around this 1869. You can see you have these major pivots, 1, 2, 3, chop over here before you break out. So I do think silver, if it has another flush down, will continue to be a buyer on silver. Let me just pull up the Bitcoin chart because we are in a Bitcoin trade right now. So if we pull up the BTC USD chart, on the daily basis, you can see that Bitcoin has had a nice move. We're roughly issued the buy alert around this 19,000 level. So what I'm going to encourage people now is to put your stop around 19.8 just to protect this trade. Do not let it go against you. We're deep in the money, double-digit gains. I do think Bitcoin has the ability to go lower. You can see you are running into short-term resistance, but considering you broke out of this trend line, what I want to see tomorrow is potentially another confirmation candle of this breakout. If we can get a daily positive close above this close, that would be extremely bullish in the short term for Bitcoin. So amazing job. We are in the money. Do not let this trade go against us. I'm recommending you put a stop around 19.8. I mean, you can certainly put it higher if you want to protect those profits even more. You could have a natural retrace back to this downsloping trend line, which is your breakout. But overall, if we break past this, you have a little bit of resistance here. But ultimately, I do think you head to the 25,000 level. Ethereum is very interesting too because we are deep in the money on Ethereum. We're up over 22%. So congratulations if you took that crypto trade with us. Right now, we issued the short alert around this 1,013 mark. We're trading at 1237. Again, notice we are into a little bit of resistance here on the Ethereum chart. If we can get through that, you do have a strong chance of going to 1,700, which would be a phenomenal gain for us. You will run into a little bit of short-term resistance with this downsloping trend line, so it may be around 1,400, give or take. But overall, again, what I'm going to recommend is you protect this Ethereum trade. Now, it's going to be up to you where you want to put your stop, but I'm thinking anywhere between 1,100 and 1,200, sorry, 1,100 and 1,150 would be a decent area to put a stop loss to protect that trade. Overall, let's just see if I can discuss anything else. Yes, we did get the UBT. We bought UBT today, so this is a double leverage play on the 20-year yields. So we basically picked it up right at this gap fill over here. which is a tremendous, I think, buying opportunity. So just keep in mind, this is a leverage play according to yields. So if we look at the 20-year, I don't really watch the 20-year much, but let's just pull it up. If we look at the 20-year yield, you can see you have put in, you are technically still in an uptrend. But that being said, with this nasty reversal candle, you may have put in a short interim high, and this could be signaling that if rates start to decline and collapse, this UBT that we just entered will phenomenally fly to the upside and net us a huge gain. Now, it's a small starter position, so in the event that the yields do continue to surge up, we'll continue to add and pick up and dollar cost average our way down. So where could yields potentially still continue to surge to? Well, you can honestly start trading all the way up to this upper range over here. So we could potentially see an additional move of, say, 20% in yields. Now, you will have to confirm. This is a nasty, nasty reversal candle. So you will have to confirm on the 20-year above the 383. And the interesting thing is that every time the yield curves have inverted, which right now the 2s and 10s have been inverted, they've inverted numerous times this year, it has always foreshadowed an epic, epic collapse. So I do think we are, as interest rates, if they continue to surge up, I do think we're going to be in store for some sort of catalyst collapse in the overall markets, which honestly is fine by me. We are net short. We are accumulating bonds. Bonds should, in theory, skyrocket as the Fed pivots and changes their policy. But again, the bonds, this is not as quick of a swing trade as the rest of the equity markets move. I think the bonds are going to be more or less a 6 to 12 month potential swing trade, in the sense that I'm only foreshadowing the Federal Reserve to pivot on their policy if once unemployment starts to uptick in the range of 6 to 7 to 8%. So I do think we're about 6 to 12 months out before that happens, probably about more closer to 12 months before that really starts to uptick. But overall, if we do have a crash, some sort of black swan event where, say, Japan causes a contagion across the global financial markets, or Germany, then look for our bond plays to skyrocket, as the Federal Reserve and central banks could pivot sooner rather than later. But again, the likely scenario is that they won't pivot until that unemployment rate upticks substantially. We also did short Teladoc today. We're also shorting Apple. So again, we're starting to accumulate short positions for the inevitable downturn in the markets. Overall, if the markets continue to float up, that's fine by me. We'll just put ourselves in a deeper short position. But right now, we are net short the market again. We've netted beautiful profits going long. We've netted beautiful profits going short. I mean, we still have Netflix trade up there. We still have Alibaba, which we're over 20% gain, which I think that one can still have a little bit more upside. We're long Air Canada, we're long Ford, we're long Canopy Growth. We have the crypto exposure. SoFi, we're deep in the money. Zoom, we're in the money. StoneCo, we're in the money. So there's tons of long positions still on the table, which we are in the money. And if we continue to float, expect for me to send out those alerts to pull off those trades. That's it for today. Hope all this analysis helps. Please give me a follow on Twitter for additional insights and information. Other than that, please give this video a big like or a comment down below, and stay tuned for more action as we close the week.